Today we're going to talk about the number two mistake that so many people make when it comes to investing in cryptocurrencies, and that is not sticking to your circle of competence. Now, this is fairly funny because the idea was popularized by Warren Buffett, who recently said that cryptocurrencies will come to a bad ending. And a lot of people are using this idea of a circle of competence to say that Warren is talking outside of his, therefore he doesn't know what he's talking about and he shouldn't be saying anything at all. But I have a different opinion. I think he's talking perfectly within his circle of competence, and we'll talk about that later in the video. But for now, let's go ahead and define what a circle of competence is. So in my opinion, a circle of competence is what you know, what you actually know. And then outside of your circle of competence is what you think you know. And unfortunately, a lot of people think they're smarter than they really are. I think this is just human nature. They feel that certain things are applicable to one another and common sense can apply to everything. Or even better yet, what often happens is people think they know themselves, and oftentimes people don't know themselves as well as they think they do. We'll get a little bit more specific here. There are four main ways in which you can increase the size of your circle of competence when it comes to cryptocurrencies. Number one is tech, number two is investing, number three is finance, and number four is economics. The more you know about those four particular fields, the wider your circle of competence is going to be. Now, the wider your circle of competence, the more safely you can invest in more cryptocurrencies. In addition to that, you're going to increase your ability to do two particular things that make it so important for you to invest inside of your circle of competence. And I want you to listen to this because it's very important. The first thing is you'll be able to more accurately measure risk. And the second thing is you're going to be more accurately able to measure the probability of success. In other words, having high ROI relative to the amount of risk that you take on. Those two factors can only be evaluated if you have invested within your circle of competence. So real quickly, let's run through those four factors that I mentioned. Starting off with tech. If you understand the cryptography behind cryptocurrencies, if you understand the source code on GitHub, if you're able to read it and you're able to understand what developers are saying, if you understand what problem a cryptocurrency is trying to solve, and whether or not the actual tech behind it is able to solve that problem, and what the timetable is in terms of delivering that solution at scale, you're going to be able to adequately measure risk, right? Because you know how long it's going to take to get there, you know what the shortcomings are, and you know what the trade-offs are. This is especially important when comparing cryptocurrencies because the more you understand the tech, the more you're going to be able to understand the trade-offs that particular cryptocurrencies make for some of their strong suits. For example, Bitcoin might be the most expensive and slowest cryptocurrency, but it has, number one, the highest amount of security due to its hashing rate, number two, the largest brand due to first mover advantage, and number three, tons of developer support and tons of resources being thrown into it because it's been around forever and it's been battle tested for years. Whereas if we look at other cryptocurrencies, for example, Ripple, is able to move much faster than Bitcoin and much less expensively, but it's a little bit more centralized due to the validators, and also the Ripple company itself, I would argue, is more centralized than what we see with Bitcoin. Again, I don't want to get too much into the politics here, the idea just being that there are differences between these that you'll be able to understand if you know the tech behind these cryptocurrencies. So I guess really I shouldn't say the company behind Ripple because that's not really a tech thing, but the validators part is. So that is relevant for you as evaluating the tech. Now we have a second thing here that can increase the circle of competence, and that is your prior experience when it comes to investing and your knowledge of investing. The more prior experience you have investing, the easier it's going to be for you to do a couple of things. One is measure risk, because that's part of doing all investing. You always need to understand the risk associated with a particular investment. Number two, and a lot of people undervalue this one, is understanding your risk profile. So a lot of people think they know themselves. I was just saying that earlier in the video. Well, here's a little bit more specific. A lot of people think they know their own risk profile. In other words, they know what they're comfortable with losing. You've probably heard a million times in all sorts of different videos and all sorts of different articles, only invest what you're willing to lose. The problem is that a lot of people don't know what they're willing to lose because they have no prior experience investing. And they don't find out what makes them uncomfortable until they lose 50% of their portfolio and they realize that they just lost 3 months worth of salary. And then all of a sudden it hits them, wow, that was a little bit more, I bit off a little bit more than I wanted to chew. So if you have prior experience with investing, you're going to be able to better understand your own risk profile. You're also going to be able to better understand the psychology of markets and understand what a bubbly market looks like, which is exactly what cryptocurrencies look like right now. Otherwise, if you don't have that prior experience, you're probably going to rely on the same thing that everybody else relies on, which is, if you look at the chart for Bitcoin over the long term, it always goes up. Completely ignoring the fact that if you happen to have bought at one of the peaks, the mental damage that will be dealt to you. I mean, there was a point, one of the peaks to valleys, I think, was 93% drop. 93%. I want you to put that in your head for a moment. A 93% drop. Could you imagine if that happened to Bitcoin now? Could you imagine what would happen to the size of your portfolio, especially if you have a lot of money invested? So a lot of people aren't prepared for that sort of a thing, and there really is no guarantee that Bitcoin will go up in the long term. One of the basic tenets of investing is that there's no guarantees. So really, you shouldn't be saying to yourself, Bitcoin is guaranteed to go up in the long term, because it's not. All right, the third thing is finance. Finance is going to help you understand what are these cryptocurrencies trying to do, because a lot of them are attempting to replace banks and existing financial institutions. So understanding the regulations that are placed on them, the relationships they have with governments, other businesses, as well as consumers, and really being able to understand the existing infrastructure, which I guess is a little bit more of a tech thing. So let's just focus on the relationships, can be very relevant in terms of evaluating whether or not your cryptocurrency is going to be successful in the long term. We're going to talk about it in a future video here, but I think one of the major issues that Ripple is going to face is, even though it's technologically superior, I think that the banks could implement a similar solution. I think they're already working on one right now that is going to try to replace Ripple because they don't want to trust a third party. Now, you can say that the transactions themselves are trustless within the network if you're using XRP, but they're still going to feel that Ripple has too much influence on the value of XRP and that it's too volatile. And again, we'll talk about that in a future video because that's a lot to lay on in this particular video, but having experience with finance was going to help you understand, there are times where being technologically superior isn't going to matter. And that can help you a lot to understand if you know how things work in the real world right now. And then the fourth element here is economics, because a lot of these different cryptocurrencies implement their own monetary policies, right? So some of them are very high inflation, some of them are low inflation just to offset the number of coins that are lost. Some of them have relatively flat, stable supplies. Some of them have a constant inflation into perpetuity, and they basically pay that out through proof of stake. There's all sorts of different monetary policies out there for different cryptocurrencies. And if you have some experience with economics, you can look at the past of prior monetary policies that central banks have utilized and see how it affects the participants within that economy. So that's another thing that can help you. So really, those four factors are going to increase or influence your circle of competence. You don't want to invest outside of your circle of competence, again, because you're going to, number one, not be able to evaluate risk properly, and number two, you're not going to be able to evaluate the probability of success all that well. Now, there is ways in which you can increase the span of your circle of competence, but the only way in which you can do it is to trust other people. And it's unfortunate because if you think about it, let's say you read a really nice research paper from somebody that talks about the scalability issues that Bitcoin is currently facing. If you don't have the technical know-how to criticize that paper, you have to trust that person that they're telling the truth, or if they are telling the truth, that it's not affected greatly by some political agenda or opinion, right? So what you are going to have to do is you're going to have to verify that person's opinion by reading many other opinions as well and kind of putting them all in one plate and sorting out what makes sense to you and what seems like opinion. In other words, what would normally take somebody maybe 5 minutes to do if they were technologically oriented is going to take you 5 hours to do because you have to read far more information in order to feel confident enough in the information that is being relayed to you. And the unfortunate reality here is that most people, they don't take those 5 hours. They trust the first person that they read. I'll give you an example of where we see this happening right now. So Cardano and EOS are kind of having a fight right now between Charles and Dan, respectively. Charles for Cardano and Dan for EOS. And Dan really started this fight by saying that Cardano stole a bunch of tech from EOS, whose, Dan's prior projects were BitShares as well as Steem, and he says that basically the delegated proof of stake method that Cardano is going to be using is stealing from Dan's prior ideas and not really giving proper credit where it's due, and it's not as secure as he says it is, yada yada yada, right? And then Charles responds to him, and he says that Dan has a personal vendetta, basically. And you go back and forth between these two people. And what you're going to find is that if you don't have a technically oriented mind, then you're probably not going to be able to tell which of the two of them is correct. Now, unfortunately, the reality here is what most people are doing is if they're investors in Cardano, they trust Charles. And if they're investors in EOS, then they trust Dan. And nobody goes beyond that, unfortunately. So people, again, are trusting people outside of their circle of competence. They're trusting knowledge from outside of their circle of competence that they can't verify unless they put a ton of time in. And most people aren't putting that time in. Now, credits to you, or kudos to you, if you are putting the time in to say, I like Cardano more or I like EOS more. But for right now, most people aren't doing that. And as a result of that, they're going to end up getting burned. So what do you do if your circle of competence isn't that big and you don't want to spend the time to widen your circle of competence? Well, the best thing you can do is stick with some of the major cryptocurrencies that have proven themselves over at least a certain span of time. I would say it kind of depends, I guess, because, Ethereum, for example, really isn't that old, but it has proven itself well enough at this point that I would feel relatively safe recommending it to somebody that has absolutely zero experience with tech, investing, finance, or economics, which is going to be most of you, right? Most of you are not going to have any prior experience in any of those things. Probably what you're going to be most familiar with is tech. But even then, I think most of the tech is going to go over most people's heads. So if you don't have any of that knowledge to provide you that circle of competence, I really recommend that you stick with Bitcoin, Ethereum, Ripple, and Litecoin, and probably not go beyond that. You could argue for some of these other cryptocurrencies as well if you just want to have exposure to the space. For example, if you want to have exposure to the privacy coin space, I would highly recommend Monero. But outside of that, you want to go with proven concepts, or at least cryptocurrencies that have some amount of history and a lot of people that vouch for them. You're really relying on common knowledge here, but common knowledge doesn't always work out because, for example, Bitcoin Cash currently is ranked number 4 on CoinMarketCap.com, but I would consider it to be one of the highest risk cryptocurrencies out there because of the fact that it's trying to replace Bitcoin. See, Bitcoin Cash, at least in my opinion, has no value unless it takes the Bitcoin brand. And the reason why is simple. Bitcoin has no value unless it has the Bitcoin brand. Plain and simple. It is so slow and expensive that there's really no reason for Bitcoin to be the king other than the fact that it's king, it has a long battle history, and we know that it's secure compared to other cryptocurrencies. Those are the major benefits of Bitcoin. Well, Bitcoin Cash is still slower than most other cryptocurrencies, and it doesn't have the Bitcoin brand. And it's very unlikely, we'll talk about this in a future video, because I'm not even talking about politics here. I think eventually Bitcoin is going to have to implement 8 megabyte block sizes anyway, but that isn't the relevant reason as to why I think Bitcoin Cash isn't going to replace Bitcoin. It's not because I think that, I'm a small blocker or anything like that. It's just because it's not realistic. So, and we'll talk about that again in the future here, because I know I'm going to upset some people, just like I just upset some people with my Ripple comments, but that's not the focus of this video. The focus of this video is that Bitcoin Cash, in my opinion, is exceptionally risky. Cardano is exceptionally risky. This valuation shouldn't even be given to a cryptocurrency that Bill Gates himself was trying to create, but still didn't have a real product yet. The roadmap is far too much in the future, yet, for us to be certain that Cardano is going to be able to deliver on all that they're trying to do. And this is the case with so many other cryptocurrencies as well. Oftentimes what causes bubbles in the first place is the fact that people invest outside of their circle of competence. And the reason why is because they have to trust other people for when to get in. So they rely on the knowledge of the masses to get in, which is also what causes bubbles. And then they also rely on the knowledge of the masses to get out, because they don't know any better themselves. So in a lot of ways, even the knowledge that I'm imparting to you here, where I'm saying stick to Bitcoin, Ethereum, Ripple, and Litecoin, because these are the cryptocurrencies that the markets have validated, in a way it's also contributing to that whole relying on everybody else. So unfortunately, the really only way to get around this is to increase the size of your circle of competence. But if you really don't want to do it, then just buy and hold. And buy and hold some of the larger cryptocurrencies. Don't trust other people on smaller cryptocurrencies, because a lot of those are just going to be thrown in the trash over time here. A lot of them are just copycats of other cryptocurrencies with some changed numbers. And I think ultimately those will be doomed to fail. I guess we'll see here though. So anyway, before I close off this video, I wanted to briefly revisit this topic of Warren Buffett and cryptocurrencies having a bad ending, because a lot of people are talking about this, saying that Warren Buffett is a dinosaur, he's talking outside of his circle of competence, and he doesn't know what he's talking about. I get what you guys are saying, because obviously he admits himself that he doesn't know a lot about cryptocurrencies, but here's what he does know a lot about. He has exceptional knowledge of how financial markets work, and more importantly, how the psychology of markets work. And I will tell you right now that cryptocurrencies look a lot like a bubble. And I think that what I'm going to be doing here, I don't know if you guys saw my video yesterday. If you haven't seen my video from yesterday, it's called Proof of Stupidity. I think I'm going to make a new series out of it, because there's so many things that happen in this market that just make me think, wow, there are so many idiots that are involved in this market right now that think they're hot stuff. They think they're smart. And the reality of the situation is that most of them don't know what they're doing, and they're going to get burned. And that's the case with most market participants right now in cryptocurrencies. So yes, cryptocurrencies will most likely have a bad ending. Does that mean they will have a bad ending forever? No, that doesn't mean that's going to be the case. I still think that, Bitcoin's going to be around in another 10 to 20 years. But we are going to have a point here where cryptocurrencies have a very, very, very poor shakening, I guess you can call it, that's going to force everybody to reevaluate themselves, because they think that they're in it for the tech, when I guarantee you, and this is just a statistic pulled out of my ass, but I guarantee you that over 80% of people that say they're in it to replace the banks, and they're in it for the tech, and they're in it for this and that, guarantee you that 80% of those people are just in it for the money and nothing more. And when they see Bitcoin go down to $1,000 again, or something stupid like that, they're going to realize real quickly just how relevant it is. So I don't disagree with Warren Buffett. There is going to be a bad ending for cryptocurrencies in the near term, okay? And by near term, I mean, he mentioned 5 years. I wouldn't be surprised to see the bubble pop in the next 5 years. In fact, I'd be surprised if it didn't. However, the one thing I do disagree with Warren Buffett on is that I don't think it's going to be a permanent bad ending. I think there's some cryptocurrencies that are very well positioned for the future, because they provide business solutions that otherwise centralized solutions couldn't provide. That's not many cryptocurrencies, unfortunately, so I still think you can apply this, wide sweeping statement that cryptocurrencies will have a bad ending. But, I think there are a few out there that really have some promise, that are going to change the ways in which we think about traditional business. But for now, yeah, I would say it's a bubble. We're going to see something bad happen at some point here, and it's going to be interesting. I'm almost looking forward to it, just so that the space can get back to being more intelligent people who actually know what they're talking about, rather than people that talk about moons and Lambos and all this other nonsense. Even though I myself am in it for the money. You know, I'll freely admit the reason I'm in this in the first place is money. But I do think there is some interesting things here that will, you know, continue to take my interest. So even if my primary focus is on making money, I think there is some interesting things here. There's some redeeming qualities. But we're getting a little bit away from the main topic of this video. Stick to your circle of competence, folks. And if you don't have a wide circle of competence, increase it. Learn. The internet is available for you to do that. Spend the time to do it before you put your hard-earned money into these assets that almost nobody knows anything about or what the future is going to look like for them. As usual, I hope you guys enjoyed this video. Make sure that you check out my Steemit if you want to interact with me. Much higher chance that I respond to your comment there than on YouTube, just because there's so many more comments on YouTube, I can't keep up with them all. And then there's also a monetary incentive for both you and I to post on there. So make sure that you check that out if you're interested. Otherwise, as usual, leave a like, comment, and subscription. Make sure you hit the bell icon, and I will get back to you as soon as possible. Thank you for watching.